What are the dominant fundamentals impacting stock index futures, and what is the price outlook?
So it looks like the political uncertainties that we have experienced in the last several months or more, I believe, will ultimately give way to the dominant influence, which is the interest rate environment, which still is very supportive. Of course, we have interest rates near record lows and in many instances at record lows. Also, we will have central banks, I believe, adding more accommodation. So it appears that it will be the interest rate environment that dominates and will sustain higher prices, at least over the near term, for stock index futures.
The yield curve has been steepening recently. What does this tell us about the outlook for industrial commodities?
So a steeper yield curve implies a stronger global economy, although most likely this recovery will be a bit uneven. But nevertheless, this implies that there will be more demand for industrial commodities such as copper and crude oil. In fact, even the copper was up 2% today, trading at its highest level since June of 2018. So the outlook for the industrial commodities, I think, is encouraging, and overall higher prices, I believe, are in store for the industrial commodities in general.
What is the best way to trade the interest rate futures markets?
So if I am right that the global economy will continue to improve, that would suggest that interest rates will increase at the long end of the curve. That means lower prices are likely for the 30-year Treasury bond futures. Also, the inflationary aspects, I believe, will become more and more of an important influence, also adversely affecting the 30-year Treasury bond futures. So I think that's the one to be trading from the short side. Any rallies that we do see at the long end of the curve, the bond futures should be used as selling opportunities.
Soybean, soymeal, and soy oil futures are near season highs. Why? Will they continue to trend higher?
Soybean, soybean meal, and soybean oil futures are near season highs because of three reasons. Number one, China continues to buy U.S. soybeans, probably more than what the market had anticipated. Number two, the USDA dropped the U.S. Soybean crop in October more than people thought. And I think they're still low on export numbers. And number three, I think that South American weather is less than ideal going into the 2021 crops. I think the trend will continue, and I think that nearby soybeans need to trade closer to $12 because of the tighter balance sheet.
Corn futures have backed off contract highs. Why? What is the direction now?
Corn futures have backed off contract highs, I think, for a couple of reasons. Number one is that we haven't seen as tight of a situation in U.S. for corn as we've seen in beans. The U.S. farmer did pick up selling cash corn, went from maybe 30% sold of his supplies to maybe as high as 60% sold, and that weighed on the futures market. We're also kind of watching pretty closely what's happening in COVID. There was concern about shutdowns and reducing again the meat demand domestically here in the U.S. and maybe globally. But right now we have two hopeful vaccines that might allow for at least the latter part of 2021 U.S. GDP to grow, maybe put this thing behind us and let people come back into restaurants and see if we can see demand for raw material to increase. So I do think that nearby corn needs to trade over 450, and then depending upon South American weather, depending upon how much China buys of U.S. corn, and depending upon how many acres we plant next year, we could even test $5.
Wheat futures have also backed off season highs. Why? What is the direction now?
So the wheat market has also backed off contract highs, and I think that's for a couple of reasons. Number one, we really don't have a big buyer of U.S. wheat like we do have in corn and beans, just like China. So it's a weather market, and we're watching pretty closely crop conditions here in U.S. Southern Plains, parts of Argentina, and also parts of the Black Sea. Now this week, Russia could see some snow, which may help conditions there. And over the next 2 weeks, Russia and Ukraine actually might see normal rainfall. The crop has been stressed. Along with this precip is some really cold temperatures, so we have to watch out for winter kill there. But it's interesting in that there was talk about La Nina maybe weakening, but now it looks like that may not happen. So if it strengthens or stays the same, some of these weather patterns that we see in southern U.S. plains, Russia, Ukraine, eastern Australia, eastern Argentina, southern Brazil might actually continue to make things dry there. So wheat's a weather market. It's probably supported by the fact that corn prices might go higher, but the upside is limited because we just don't yet see export demand for U.S. wheat.